So thank you everyone for taking time out of your day to attend the presentation. So the focus on today's presentation is why I'm investing in Calgary. So for those that don't know me, little introduction. Alex Wilson, owner and broker of record for Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 12 years. #1 Remax agent in Ontario for individual transactions in 2019. Actually didn't update these stats, but we do have the 2020 stats out. So number 25 Remax agent in Canada in 2019 was number 13 in 2020, and then went from 80 in 2019 to 34 in the world in 2020. Also inducted in the Remax Hall of Fame and awarded the Remax Lifetime Achievement Award at 35. But none of that is relevant to you. What is relevant to you is how I invest. And my investment journey started in 2012, and that's when I turned a $39,300 deposit into a $14 million portfolio over the last 2012. So over the last 9 years, which includes 14 condos, a High Park triplex, and an apartment building in Hamilton. And why that's relevant when I started my career, or my investing career, is that first condo I bought was $269,000 with parking. It was at Queen and Gladstone. And to get that pricing in the GTA or heck in Ontario seems to be impossible now. So when I look at the pricing in Calgary, I see a lot of value, and B, it'll allow people to get in and start their journey and start building their real estate wealth at a lower cost basis, because it's quite higher in Toronto and the GTA to get in, and we'll get into more of that. But this, I like to share everything here, very transparent. This is my entire portfolio. And why I show this is to show you what the value of real estate investing. So what I did is I took all my units and I said, well, what are they going to be worth in 10, 20, and 30 years? And why the 30-year mark is quite exciting is that in 30 years, all my properties will be paid off, because you amortize your mortgages over a 30-year period. So every year, your mortgage goes down a little bit. And it's not you paying that off, the tenant paying that off. So in the current market value of the portfolio is just under $15 million. In 30 years, the portfolio would be worth $36 million. And this is just calculated at a nice conservative 3% compounded annual growth rate. So not looking anything crazy. But I dove deeper. So what I said is, well, there's that nasty word inflation. So $36 million in the future isn't going to be the equivalent of $36 million today. So I was like, what is that actually in today's purchasing power? So I put that into Statistics Canada's inflation calculator, and I came up with just under 21 million. And again, I haven't done anything. I just put the initial deposits down on these properties, and there's been a tenant in all these properties paying down the mortgage on those. So in the future, I'll have properties that are free and clear. So then I went another step. I'm like, well, what's $21 million mean? How can I live off of that? So what I did is I took a simple calculation. I said, well, if I have investments in general worth just under $21 million, and I applied a 5% rate of return on those, what would my payout be annually? And that is over $1 million. Now, again, we want to protect against that inflation. So we want to reinvest part of that. So 2% reinvested to make sure that portfolio, that investment can be passed to future generations if I like. So I would actually have just under $625,000 in today's purchasing power to live off of in the future. And it was like mind blowing when I did this. And what I did here is I broke it up into smaller bite-sized chunks. So you may be sitting there going like, I'm not going to build a $15 million portfolio. I think that's too much. It's not what I'm aspiring towards, but I don't even need a $15 million portfolio. I won't need that much to live off of in the future. So I broke it down into bite-sized chunks. So if your portfolio is worth $1 million or $2 million or $3 million, let's use the $2 million mark. So you have a real estate portfolio worth $2 million. value in 30 years is just under 5 million. You adjust it for inflation, just over 2.8 million. 5% of that per year is $140,000. That's in today's purchasing power. I recommend that you take a payout of $84,000 in today's purchasing power. Isn't that amazing? You've just built your own pension fund using real estate as a simple device. You buy the real estate, someone lives in it, it goes up in value steadily over time, and that person living in it pays off the mortgage, and then one day you get the property free and clear. Now, 30 years also may seem like a long time. I won't own all these properties in 30 years. My mantra is, buy, hold, don't sell. But there will be times where you're adjusting your portfolio, like any stock portfolio. But you'll probably be reviewing your portfolio every 5 to 10 years. That's when you're going to be making adjustments. But it just shows you right here that anyone can do this. Anyone can do this. You start small, and then things start growing. So that's when we flow into why Calgary. So 2019, Calgary came across my desk, and I'm like, oof, this looks really interesting. This pricing is very similar to the first condo I bought in 2012 in Toronto. So I started researching Calgary. So Calgary, #1 most livable city in North America for the last 2 consecutive years. The 4th most livable city in the world for stability, healthcare, culture, education, and infrastructure. Top 5 on the Economist Intelligent Unit's Global Livability Index for 10 consecutive years. It's located in the foothills of the Canadian Rockies. Tons of green space in Calgary, and second lowest cost of living of Canadian cities, and 9th lowest in North America. Well, we know we can't say the same thing about Toronto and Vancouver about low cost of living. That's some of the highest cost of livings in the world. Calgary looks like a great place to live and an affordable place to live. So that piqued my interest. Obviously, going into the nature aspect, it's the sunniest city in Canada, so tons of sun in Calgary. An extensive outdoor path network, and ranked second for healthiest lifestyle in Canada. So when we look at this and we think of COVID times and everyone's readjusting, okay, well, do I need to live where I'm living? So why do you need to live in Toronto? Why do you need to live in Vancouver? Now, Vancouver is beautiful. So maybe we'll pick on Toronto a little more. Why would you live in Toronto? But you have this great city where if we look at a population that's going, hey, you know what? I actually don't need to live where I'm living right now, but I do want to live in a major metropolitan center. Well, where is it affordable to live? Calgary. Where is a great lifestyle place from a health perspective? Calgary. Are there great recreation activities I can do? Yes, you're right at the foothills of the Canadian Rockies. 5 world-class ski resorts within 2 hours, over 200 hiking trails in Banff National Park, a true global treasure. And it's literally only an hour-and-a-half drive to Banff, not let's say 2-hour drive to Muskoka, but to get to Muskoka in 2 hours, you got to leave at 4 a.m. in the morning. This is a real 1.5-hour drive. You don't have the same traffic issues to get out to Banff as you do to get up to Muskoka. So you have this affordable city which has a great lifestyle aspect. Why wouldn't people live here? So why is Alex investing in Calgary? So that was my initial research going in there, and then I really started doing a deeper dive. So if you're picking up the newspaper, or reading online, you always get bombarded by oil and gas. But let's forget about that headline and let's look beyond that. So we are in the business of investing in roofs over heads. So that means if a population is going up, that's a good thing for us. So over the last 2 years, we saw net population growth in Calgary for 34,000 people in 2020. And 2019, 35,000 people. So it has a net population growth. There are more people moving to Calgary than leaving Calgary. Calgary also, they have money. Calgary is the highest millionaires per capita of all the major Canadian cities. And also from a wage perspective, they represented the highest wage and salaries per employee in Canada at $66,000 in 2018. So people in Calgary make money, and it has positive momentum on the growth, population growth perspective. And then even beyond that, when we look at growth, Alberta is set to increase 48% and will be larger than BC by 2043. Put that in perspective, Alberta currently has 600,000 people less than British Columbia by 2043, which is not far away, only 22 years. It will have 400,000 people more, so a 1 million person swing will be moving to Alberta. On top of that, 48% growth in Alberta. Ontario is only set to grow 24%. So you have Alberta is going to lead population growth in all Canadian provinces and Canadian jurisdictions. So if I'm in the business of investing in roofs over heads, I want to make sure I'm in the area that is growing at the fastest possible rate. So on top of that, economic output. So we got roofs over heads, but what about actual money? Well, Calgary is the 4th largest city by population, but it's also the 4th largest city by GDP. You have your big 3, Toronto, Montreal, and Vancouver, but economic output, number 4 is Calgary for economic output. The economic output of Calgary is greater than the economic output of whole provinces like Saskatchewan or Manitoba. So they have money and they have a growing population. And then on top of that, this is cheating a little bit. I'm following the money as well. So a lot of the projects, all the projects I've invested in Calgary have been by Minto. So Minto is an Ontario-based builder. Why that's important to me is I own their product in Ontario. They're an extremely large company, over $4 billion under asset management. They're publicly traded on the Toronto Stock Exchange. They have 1,100 employees. The family behind them, the Greenberg family, is in the top 100 richest families in Canada. Very, very well backed. I know they're going to be around. They've been building for 60 plus years, and they have a high focus on sustainable building, and they care about their brand recognition. So they have 1,100 employees. They have a number of analysts, and they've done the research on Calgary, and they started buying up real estate in Calgary. So I've done my own research to make sure it makes sense. But here we have a publicly traded company that's based in Ottawa and Toronto, and Florida for that matter, and now they're buying in Calgary. So a little bit of a piggybacking on that, because they have analysts on salary that their job is to find great investments for them to make a profit on. So first, you want to look at buy low and sell high. So the question I get from a lot of people is like, well, what's the growth been like? Everyone's used to like Toronto and Vancouver growth. Well, what's the growth rate been in real estate in Calgary? Well, it's at the bottom. It's a boom and bust economy, and they're just finishing up the bust cycle right now. So we've seen new condo prices. They've dropped 21% since 2017. That's why I'm buying. I'm like, well, I'm used to things going up in Toronto, but I know what the pricing is in Toronto and the GTA and in Vancouver. But prices in Calgary have gone like this, and we've seen them now bottom out. So they went down, and now they're like this, and now we're slowly seeing the uptick now. So I'm buying at the bottom of the market. That's the key thing, buying low and profiting on the opportunity. So that's why I have this classic Warren Buffett line. Two reasons: buy low, sell high. That's a Warren Buffett line, but also Warren Buffett made an investment last year into pipelines. So he knows that there will still be a backbone of oil and gas moving forward in the future, which backbone, which you're going to hear me reference more later on in the presentation, backbone is what oil and gas has and will continue to be in the future. And there'll be other sectors that come in that will lead the growth in Calgary. And then speaking of distribution, and when you look at distribution, so I've never mentioned until this year talked about the Keystone XL pipeline. We never talked about that because it's absolutely not relevant. So to put it in perspective for everyone, Trans Mountain Pipeline is the one that you care about, which is under construction and which is of strategic importance to Canadians and the Canadian government, so much so that they bought it. So to give you an idea, Alberta is landlocked. So it's not easy for them to get their raw material out to other markets except the US. So when you have gluts of supply, it has an even greater impact on the price of Alberta oil. So for example, in 2020, Alberta oil was selling at 50% less than Texas oil. So we don't necessarily need the price of oil to go back up, the worldwide price of oil to go back up. We just need the price of Alberta oil to stay at a more regular level. And how will that happen? Well, we want to diversify our customer base because the majority of oil goes to the US. And by doing the Trans Mountain Pipeline goes over the Rockies. It's a tripling of a current line. It's going to go to Vancouver and then allows you to go to other markets around the world via cargo ship. And that will increase Canadian exports by 13% for oil. That's a massive, massive increase, and that's slated for completion in 2023. So that's the pipeline you care about. Keystone, which was canceled, it was already canceled in 2015 once. And when we actually look at the supply that's required of oil that's required of the US, they had a record year of Canadian imports, 3.8 billion. They're expected to cap out between 4.2 to 4.5 billion by 2024, 2025. Our capacity currently sits at 4 billion barrels to the US, not billion, million, 4 million barrels to the US, but there are already pipeline construction in regards to increasing the capacity of current lines to give us the capacity to continue to sell oil to the US to make their targets of 4.2 to 4.5 million barrels a year. So we have the infrastructure already in place to sell oil to the US. Keystone does not matter at all. What matters is the Trans Mountain Pipeline, which is then going to expand our customer base and allow us to align more closely to the worldwide oil price. So that's distribution. Distribution and diversification. That's very, very important in the future of Calgary. So Calgary ranked in the global top 10 most attractive cities for workers. So again, talking about that, well, why am I living where I'm living? Why don't I just make my home an attractive place to live? That's what Calgary has to offer. Calgary also has the highest proportion of STEM graduates of all major Canadian cities. That's degree programs in science, technology, engineering, mathematics, and low cost office space. Now, some people may see this as a negative, but this is a huge positive for Calgary moving towards the future. So Calgary had a glut of office building happen in 2014 because the price of oil was over $100 a barrel. So there's a big building boom in commercial real estate in Calgary, and then the bottom fell out of oil prices. So that led to a very high vacancy rate of 27%. What that also provides is a very affordable office space environment. And what has happened is now you have technologies coming in and taking advantage of the low cost of doing business in Calgary. And we're going to talk more about that and talk about some success stories. So Calgary is home to 435 technology companies. 3/4 of these are startups. There are more than 2,000 open tech jobs in the city right now, and a record 44,500 Calgarians are working in tech right now. So oil and gas is always going to be there. That's the backbone. There's a revenue stream you can attach to that. But the future, the growth levels are going to be in tech companies setting up in Calgary, in other industries setting up in Calgary, taking advantage of the low cost of doing business. Because not only does Calgary have an incredibly low office space rent, it also has the lowest tax rate, corporate tax rate in Canada, and there is no provincial sales tax. There's only GST, which is the federal tax. So right there, no provincial sales tax. So that means you're saving 7% right there, because that's what the provincial sales tax is in Ontario. So you have a 7% savings there, and then the lowest corporate tax rate as well. So how affordable is Calgary office space? So as tech has grown, so is the number of tech companies that are moving into downtown, in part thanks to the affordability of office space there. An average office space in Calgary's downtown leases for $17.50 per square foot, compared to $21, 23.4% more in Edmonton, over $35, over 100% more in Toronto, and over $44 and 155% more in Vancouver. So you have this incredibly low office space cost for these companies to move in to the downtown core, a tier 1 city. So let's talk about that. Like, it's like Alex, one thing saying these stats, but like there are success stories that you don't read about in Calgary. So for example, you have Benevity. You look at the date of this article. This is December 4th, 2020. They achieved unicorn status, $1.1 billion valuation. They sold their company. You have Solium Capital that sold to Morgan Stanley for $1.1 billion in 2019. There's also a $1 billion deal between Calgary-based medical research firm Parvus Therapeutics and San Francisco-based biotechnology company Genentech that same year. So you have these unicorn companies that are startup companies that are sprouting up. And this is massive, massive, massive Calgary. The reason being is that now Calgary is starting to get recognized as a place of technology innovation. And there was actually just an article today of another purchase of a tech startup company for $500 million in Calgary. So you have the founders of these initial companies, they're investing in the startup environment in Calgary. You have the private equity individuals that now see, okay, there are a lot of good companies that are sprouting up in Calgary. We want to make sure our investment dollars are there. So they're scouring Calgary and putting them to work. So you have this great now incubator, this environment of startup companies that are achieving $1 billion valuations in Calgary. This is happening today. And I'm going to go, and this is exciting. So when I gave these examples in my initial presentations in January 2021, and then following usually 2 to 3 weeks later, I would find news articles talking about them. So I'm just going to share the screen here. Okay, and there we go. So as I mentioned in the slide, Simon growth shows tech sector gaining traction in Calgary. They just raised $55 million and they're expanding their employee base in Calgary. Also, while I'm continuing on here, and we'll touch more on other slides, not only do you have these homegrown companies that are employing new tech employees in Calgary and are actively looking for more employees, you have companies that are leaving other provinces to open up their offices because of the low-cost environment. So if we look at the date here, February 2nd, 2021, tech firm moves headquarters to Calgary from BC, another sign of the city's future growth. I have a slide on that. We're going to talk about that more. So we have companies taking advantage of the low-cost environment to do business in Calgary, opening up there, moving their offices there. And then the big one recently, and we'll again talk about this more, about why this is happening, multinational tech giant Infosys to bring 500 jobs to Calgary. So again, these companies didn't expand in Toronto, Vancouver, Ottawa, Montreal. And for example, Infosys, they're opening up an office now in Calgary. So that's where bringing another 500 jobs to the Calgary market. And these links are in the email that'll send out after. So I'm just going back to the presentation. Okay, so as I said, showed the article there. So Simon had fewer than 20 employees in the spring of 2019. Today has more than 200. They've just signed a lease for 79,000 square feet in downtown Calgary, looking to hire an additional 200 to 300 people in 2021. Halcyon officially outgrew its cramped office space in Blackfoot Industrial Park last year. That's a Calgary park. Now they've gone from 3 staff to 68 staff to 150 staff, and they just signed a lease for 20,000 square feet in downtown Calgary. LodgeLink, that'll require 300 new tech-based jobs over the next 5 years in Calgary. Will require an additional 50,000 square feet of office space in Calgary. Not only on that, they'll also require 300 non-tech jobs hiring. So there is positive momentum with the employment data within the tech community in Calgary. Now, we talked about Infosys, which is the massive one. That one just happened recently. Multinational company bringing 500 employees or hiring 500 new employees in Calgary. CloudExa, another example. They looked at Vancouver, Toronto, Montreal. They decided to open their Canadian head office in Calgary as well. So you have these international tech companies looking at Calgary, taking advantage of the environment, the low-cost environment to operate out of. the great environment it is for their employees, the affordable aspect of living there, they're opening properties there now, or companies there. Now, how do I know this is happening? Well, A, we gave examples, but B, it's already been happening in the US. So there's been an exodus of companies from Silicon Valley to Texas. Why are companies leaving California? It's a case study we can apply to Canada. So fleeing high taxes, Alberta has the lowest corporate tax rate in Canada. No land transfer tax or development charges in Alberta. It's a capitalist province. They're focused on low taxes or no taxes. No provincial sales tax in Alberta or Calgary either. Expensive housing. So again, a much lower tax environment in Texas versus California. As we know, real estate in California is incredibly expensive, especially in San Francisco. Well, if we look at Calgary, Calgary is the second lowest cost of living out of all major Canadian cities and the 9th in North America. So incredibly affordable housing. You know, I was talking with one individual that called about Calgary, and he said, if you can compare a lot of the trajectory to Houston. Houston's had a lot of success over the last decade, transforming itself from oil-based to a multi-industry city with tech companies setting up in Houston. So you have a low cost of living, so great for your employees. They don't need to live on a couch, let's say, for example. They can actually afford to live and enjoy their lives. And government regulation. So 175 million committed to the Alberta Enterprise Corp for Innovation, no rent control. So when COVID hit, the Alberta government went right into action, lowered the corporate tax rate, created a enterprise and an innovation fund. So they're actively seeking new business, new industry to come to the province. And let's look at some of the companies that have left California, or I shouldn't say left, it's not a full leave, but which have established now a presence in Texas. You have HP, 60,000 employees worldwide, making a move to Texas. Oracle, 135,000 employees worldwide. Tesla, as we all know, 48,000 employees worldwide. Dropbox, 2,800 employees worldwide. These are companies now that are opening offices in Texas beyond their current office space in California. And we talked about Alberta, and I talked about its low tax rate environment. We talked about Alberta and its backbone of oil and gas. This is what's really incredible. So Alberta has the ability to be aggressive and spend to create these new incubators, these new favorable environments for businesses to operate in. So if we look at the net financial debt in Canada, Alberta has the lowest net financial debt in Canada per resident. So there, when we look at the chart, they're under like $2,500 per resident. That's the net debt that they have. Versus if we look at Ontario, near the highest at nearly $19,000 per resident, and the average being just over $10,000. Will they grow the fastest? Net financial debt, 100% they're going to grow the fastest, but they have the capacity to increase their net financial debt per citizen because they've had the oil and gas money coming in, which allowed them to operate at a very, very low debt level. And now, because let's call it the proverbial savings, now they can go out and spend and invest in growing their business environment, making it attractive for business to open there. And then this slide here, just showing diversification away from oil and gas, all the different various industries that are in Calgary. So oil and gas included with forestry, fishing, mining, quarry, represents 6.5% of the population in Calgary. So it is a very diverse economy beyond oil and gas, but we get caught up. It's a headline grab to pick on Calgary and talk about the negativities in the market and the oil and gas. Oil and gas already contracted in 2017. All the layoffs, for the most part, have already happened. You're not going to see mass layoffs anymore in the Calgary and Alberta market because those layoffs have already happened. The excess has been cut off. Now they're the lean machine. So we're beyond those days of making cuts in the offices. Now we're looking at, we got the backbone of oil and gas. We're not going to look at that as a going to lead us out into a growth industry, but it's always going to be there, a revenue level. But because we have that backbone, we're going to expand now into other categories like the tech sector. So boom and bust, that's basically what it is we're looking at that boom and bust environment. We're coming out of the bust cycle and we're going to be going to a boom cycle. We have seen real estate in Calgary finally rebound in 2020 and into 2021. Record sales in March and February of 2021. And then when we just talk about the value play of pricing in Calgary, for example, East Hills, which is going to be our next development, pricing there is starting in the low 200s, including a parking spot. Where in Ontario can you get that? You can't get that anywhere in Ontario in a pre-construction. We're also, so giving an idea of the benefits of when we sell these, you can secure a unit with 5% down. So initially, the pre-construction, we're used to 15 to 20% deposits in Toronto. And when I reply to people are like, well, what's the deposit schedule? I'm like 5%. And they're like, well, when's the next deposit due? I'm like, no, it's only 5%. You're able to secure a unit with 5% down until final closing. A final closing, you still got to get a mortgage on the property. Typically, that'll require 20%, but that's going to be in 2024 for our next development. So you're able to secure a unit with 5% down. If we're looking at pricing starting in the low 200s to the mid 3s, your capital contribution is going to be 11,000 to 17,500, a very, very small capital commitment, which we'll talk about more. You'll have the ability to sign your units, 2-year rental guarantees, including full property management. So that's something I negotiated with the builder because I know if we're located in Ontario or if we're located in British Columbia, we're not there on the ground in Calgary. So we want to make sure that people feel comfortable investing in a market they don't physically live in. So we have the 2-year rental guarantee, which actually lease back. The builder is going to lease the unit from you from day one. There's no occupancy period in Alberta. You go right to close. And then from day one, every month, you're going to get a set rent check. That is a calculation based on the purchase price of the unit, and it's included in your original agreement purchase of sale, and that includes full property management on the property as well. No development charges, which is amazing. Those there could be $20,000 in Toronto. No land transfer tax. We have double land transfer tax in Toronto, so you're looking at like another $20,000 charge with the provincial and the municipal sales tax. And all units cash flow positive with the rental guarantee. Again, something that's very difficult in the Toronto market. And to give everyone an idea of how the lease back works. So these are specific units that I bought in Calgary. So for example, I bought a 2-bedroom unit with parking and locker in Era. The lease back amount works out to $1,855 per month. Calculating the mortgage, the property tax, the maintenance fee, and the lease back rent, this will work out to $265 cash flow positive per month. Like that cash flow is what I was getting back in 2012 when I made my first investment in Toronto. I can't do that anymore. East Hills, which East Hills 2 is coming any day now. We're just waiting for finalization of pricing and floor plan. So I bought a 2-bedroom there, $270,900. The lease back amount on that works out to $1,467. So the mortgage on that with property tax, maintenance fee, lease back rent, that works out to $218 per month. So huge value in regards to securing an asset out there. And then when you get it, it's going to be cash flow positive. And when we talked about capital outlay earlier, you're only doing an initial deposit of 5%. So my initial deposit on Era, that was just under $20,000. So if the property goes up by $20,000, then I've doubled my initial investment. Doesn't take a big move for that initial investment to go up over 100%. East Hills Crossing, initial 5% deposit, under $15,000. In 2 years, if the property goes up $15,000, I double my initial investment. So not large movements can make great results with the initial capital outlay. And then pro-investment, Alberta's pro-investment, as I discussed earlier, no rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax, no development charges, and a $10 billion stimulus package, including reducing corporate taxes. So they're a pro-capitalist environment for people to invest in. and the successes. And I got out another one because we just sold out Era 2. So Era, we sold 180 units in 3 months starting in November 2019. We just sold Era 2 in March, over 2 weeks of another 40 units. Annex, we sold out the initial investor release of 40 units in 2 months over the summer 2020. And then East Hills Crossing, that initial building, which launched in November 2020, in 2 weeks, we sold out all 87 units in the building. So when these come to market, they go very, very quickly because people represent the value they offer, and also the security of the leaseback program and the low amount down on these properties. So if you have any questions, you can put it in the Q&A box. I notice there's a little bit of a chat going on here. Let me see if there's any. Are these companies located in a certain area? Not anymore. In terms of the 2-year rental agreement for review, thanks. What it works out to, it's 6% of the purchase price divided by 12. That's how the lease back works. So when the building launches, I do an analysis in all the units, so you get an idea of what the lease back rent will be. That is included day one in your purchase and sale agreement. Current rental vacancy in Calgary. 2 things that I like to tell people. Number one, it's COVID right now, so your number is all messed up. It's not really a relevant number. Number 2, you also have a lease back for 2 years, so you're not worried about vacancy. It's going to be rented out because it's included in your contract. So you're not worried about renting the unit out. You have a 3-year build time, 2021, 2022, 2023, get the unit in 2024, then 2024, 2025, it's leased out for you. 2026, that's when you're going to be renting out the property. But give you an idea what the current vacancy rate is, about 6% right now. Just to confirm, 5% down and the remaining 15% total, 20% will due when the building is complete. Correct. And if you're moving into the unit, which I doubt anyone here is doing it, you can do it with a CMHC secured mortgage, only 5% down. But the majority of people are going to be keeping this as an investment. So investment properties, you require 20% down to acquire a mortgage, and that's on closing in 2024. We'll now open up the Q&A. Okay. Is Minto doing the property management in the first 2 years? Legally, Minto will be our tenant in the first 2 years. Is it true that we lose the GST rebate in this case? So it's a third-party company that's doing the, which is doing the management. I'm going to confirm on the GST rebate, but the GST rebate amount is very, very small. It's not an HST rebate, it's just a GST rebate. So you're only looking at a rebate of a few $1,000s anyways on that price point. It's only works out to like 33% of the GST amount. What are the chances the market leaps forward and the builders cancel projects to resell at higher prices? Great question, Joe. That's why I sell Minto. So Minto, been around for 60 plus years, has never canceled a project. They care about their brand name. There won't be any cancellation of the project. And we work very, very closely with the builder throughout this whole process. And they've already started construction on phase 1 of the East Hills development, which is the new building, which is launching. Era is already under construction. Annex is done this year. So you're not going to be looking at any cancellations. Can you briefly describe the good neighborhoods for investment in Calgary? How's the location of Era, East Hills, and Annex compared with each other? Yep, great question. Era and Annex, those are downtown areas. Era is located in the Bridgeland community. Annex is located in the Kensington community of Calgary. So Kensington community kind of be like your West Queen west of Toronto. Era, you're looking at a developing community, so probably more like a Queen East style. Both are very, very popular, great neighborhoods to live in. East Hills is more of a suburban location. Southeast Calgary, it's a brand new community. So to be downtown, you're looking at $100,000 or $150,000 more in the purchase price. The East Hills is right off the Ring of Calgary, which is a highway system that goes right around Calgary. So you can easily get onto the highway and get anywhere you need to go. You also already have a RioCan commercial plaza established across. So East Hills is going to be a brand new community. There's 4 buildings going up and 350 townhomes. So a total of over 700 properties going into this and creating a brand new community. Do I ever need to fly to Calgary to do closing, PDI, etc.? Nope. Can we sell? So just to clarify, I answered that question really, really quickly. Do I need to fly to Calgary to do closing? No, you do not. And you can designate someone out in Calgary to do the PDI. For those that don't know what a PDI is, that's a pre-delivery inspection. That's when you go into the unit to make sure everything's okay with the unit. Can we sell an assignment before closing and get a profitable return? The answer is yes. Yes, you can sell an assignment. There's $1,000 assignment fee. I never recommend the buying and selling an assignment as an investment strategy. Buy and hold, as if you looked at the very beginning of this presentation, how I've built a nearly $50 million portfolio is not transacting in real estate. What I've done is bought, hold, and then refinance properties, and then took that profit and bought more properties. So now instead of having one property going up in value, I have multiple properties going up in value. And that's how you build a true portfolio, real estate portfolio. Just again about the lease paying the GST rebate. The GST rebate amount is very small because of the small price points that we're dealing with. Again, pricing is starting in the low 200s, and GST is only 5% of the purchase price, and it's only 33% of that 5% that the GST rebate would be. Yes, Beltline is also another great community in Calgary. Beltline, we're probably looking at more of a between Spadina and King area. So that's where you're getting the high rise. So there's more high rise in the Beltline. So the Beltline is more your high rise tower. So a great neighborhood to be in. One of our investors in Era just bought a resale condo in the Beltline area for them to live in. They live in Calgary. So someone's asking, just confirming, so we only have to put 5% down on all pre-construction projects and nothing else to be paid until closing? Am I hearing this properly? Yes, you are. Only 5% down until closing. For a ballpark number on a price per square foot basis, how is the pricing among the neighborhood Era, East Hills, and Annex? If we can afford, would you recommend to invest in downtown versus suburban? Well, I can say, Ricky, downtown is sold out there. I don't have anything downtown to invest in. Era is sold out. We do have some inventory at Annex, but you're going to get the property this year because the building is already done. And we can talk, if anyone has any interest in Annex in the program they're offering there. There is no rental guarantee in Annex, but there are some other incentives there. You're looking at price per square foot. East Hills will be in the high 3s to low 4s per square foot, including a parking spot. Era was in the 600 range. I believe Annex is a little bit more expensive than Era in regard to a price per square foot. Which area is like Queen West? That would be the Kensington area, which is where the Annex is located. We do have a project there. The building is completing this year, so there is no rental guarantee on the Annex building. You would have to close. But what they are offering in the Annex building, they would cover your mortgage for 2 years. They have a program with TD, I believe, and they'll actually pay your mortgage for 2 years. So you put 20% down, you would have no mortgage payments for 2 years, and then you could rent out the unit and generate significant cash flow. Again, if anyone, I'll be sending an email out if anyone has specific interest in the Annex development, let me know and I'll email more details on those, on that. And just going through, I think that is everything here. I'll just, last call for questions. This has been recorded, so you will get a recording of this to your inbox tomorrow once we just have it edited and uploaded. So everyone will get a copy of this presentation. And our next launch is East Hills, but I'll include some information on Annex as well. Again, that building's completed this year, so you're going to be coming in with 20%, and there's no rental guarantee, but there is the they're going to cover your mortgage. East Hills will be ready in 2024. Pricing is going to start in the low 200s to the mid 3s, and it's only going to be 5% down until 2024, and that's going to have a rental guarantee as well. So thank you. Oh, we got some more questions. Will this video be online? Yes. Where can we get a full list of availability and prices and floor plans for all buildings? Can this be emailed? Yes. Anyone that signed up for this, you will get that. I don't have pricing and floor plans for East Hills yet. It hasn't been finalized. Very, very soon. I love it. Disregard. Is condo fees per square foot lower in Calgary too? Yes, it is. They are lower in Calgary. You'll get all that information. So if anyone's wondering about East Hills, when that comes out, everyone will get that pricing and floor plans. It just has not been finalized yet. It's coming either this week or next week. Just waiting for head office to do that. But there will be the pricing and floor plans for Annex in the email, which is ready this year. And then for those that may have interest in Nude, Kareem, good news for you. That building is sold out. There's no more units available in Nude either. Not a Minto building, but another building that we sold units in for people. So thank you everyone for attending online. One last great question. I'll answer this one because it is actually an extremely common question. After 2 years, would your team manage the property for rental? So after 2 years, there'll be a current tenant in the property, and there's going to be a company that's managing the unit. You could choose to continue on with that company managing the unit, or I will have other options for you. What I mean by that is I've sold hundreds of units in Calgary now. So I'm going to have bulk buying power with property management companies out there. So A, I'll either have another option for individuals, or B, maybe I'll open my own company out there as well. That's yet to be determined, but I will have a solution for everyone. I'm invested in all these projects just like you, and I have family members, I have clients in those projects as well. So my journey, you guys get to all go on my journey too, and I'll have solutions for anything that comes up for people. So thank you everyone for coming online, and we'll talk to everyone soon. Talk to you later. Bye-bye.